Hello everybody, welcome to another episode of Erickson TV. Curtis here with Lauren. Hello Lauren.
Hey Curtis, hey everybody.
Hey Lauren, this came from financial advisor Scott Burns, and he did a headline which I thought was interesting. The headline was, "Experts say that stocks are going to crash. So what are you going to do about it?"
Okay.
And it was one of his clients that emailed Scott in a panic, and this was the headline he was reading.
Okay.
And so, you see these predictions all the time.
That's right.
It's even worse on the internet.
Yes.
You get little advertisements like pop-ups about that. But so anyway, the point of this is that there was an advisory firm that between 2005 and 2012 collected 6,582 forecasts.
Okay, right.
They were offered publicly by experts predicting the direction of the U.S. stock market.
Right. Okay.
So the interesting thing about it is, of the 6,582 forecasts, and these are like yearly forecasts.
Yeah.
The correct ones were only correct 46.9% of the time. The kindergarten, they said his byline was the kindergarten class could have probably rivaled that, but just randomly throwing darts. Right. So what's your takeaway from that?
Yeah. Oh, yeah. Those internet advertisements. Today I saw an internet advertisement. Sorry, you just brought this up. That an investment that makes 17% per year with no risk.
Oh, yeah.
I thought, wow, 17% with no risk. Yeah, great. Sign me up. With experts' predictions, they've done lots of studies on experts' predictions, and one of the many interesting things about those studies is that an expert's ability to predict the future seems to get worse the more famous the expert is.
Right.
So,
well, speaking of that, they use another example from Business Week gave guidance for they pulled 7 hedge fund analysts. Supposedly these are experts.
Right.
In the field. All of them. So this was in December of 2007, and all of them predicted that stocks would rise for 2008.
Right.
Yeah. Which of course we know that didn't happen. Dropped 38% the S&P. There was one hedge fund manager of all the hedge fund managers that did predict the crash of 2008. His name was Mark Spitznagel.
Okay.
But then when they followed what happened to Mark since that, because he did not forecast that the S&P would rise in 2009. And in fact, he made a bet, that $6 billion bet, and his fund is down 40% since the
because see what happened was he's one of these people who probably was always predicting that the markets would go down, and so he continued to make that prediction. Unfortunately, if you run a hedge fund, you can do things that you really can't effectively do in mutual funds, and you can manage to lose that much money even when the stock market goes up.
So if you're watching this episode and you're getting nervous because you're seeing all these forecasts, what do you think the best advice is?
Ignore all the forecasts. We really don't know what's going to happen.
If somebody does say they know what's going to happen, or they're making a prediction, that maybe we should run away from them.
Right. Yeah.
And long term, we don't know exactly what's going to happen, but long term, your best chance of success is to stay invested.
That's right.
Right. Okay. Well, thank you for watching this episode of Erickson TV. We'll see you next time. Bye now.
See you next time.